Mr. X contributed capital in the form of cash 90,000 and furniture 20,000. Mr. Y contributed capital cash 50,000, stock 70,000. You have to pass compound entry. Let's assume that this transaction happens, let's say this is happening on 1st Jan. Okay, so it's happening on Jan 1st, 2015. So this is the assumption. This transaction is happening on Jan 1st, 2015. So how do you pass the entry? Let me capture the format. So let us decide the debit and credit. If you look at the Mr. X contribution, he had contributed in the form of cash and furniture towards capital. So we should always analyze what is the two accounts affected by this transaction. When he is contributing capital, yes, we understand that capital account is one account that is affected, and the other account can be cash. So cash and capital is one transaction, furniture and capital is another transaction. So in this, you basically have two transactions. Similarly, when Mr. Y contributes capital, the one account that is affected is capital, the other account is cash. So one transaction is going to be cash and capital, the other transaction is going to be stock and capital. So how do you decide which account should be debited and which account should be credited? See, Mr. X is contributing capital. Okay, so Mr. X is a natural person and he is contributing in the form of capital. So he's the giver of benefit. Giver of benefit should ideally be credited, right? And there should be a debit. See, when he is contributing capital, that contribution comes in the form of cash. Debit what comes in, so cash should be debited. Furniture comes in, furniture should be debited, right? So these two items got to be debited, whereas Mr. X capital account should be credited. And same here, cash and stock should be debited, whereas Mr. Y's capital account should be credited. So what we'll do, we'll try to capture each and every item, and when this transaction have taken place, it's happening on 1st Jan 2015. So it is happening on Jan 1st 2015, and what we understand is cash account should be debited, furniture should be debited, then again cash and stock should be debited. Okay, so let me capture that. First is cash account got to be debited, so let me write cash account debit. Let me just increase the font size to make it a little readable. Yeah, so cash account got to be debited, and I'm talking about Mr. X. So what is the amount? 90,000. Okay, then I have another transaction, furniture. Furniture account should also be debited, and what is the value? It is 20,000. And now I have to give the corresponding credit to Mr. X capital account. So to Mr. X capital account, and the credit should be equal to debit. Okay, so this should be equal to this 90,000 plus 20,000. So my credit should be 1,10,000. Now I'll move on to Mr. Y. Mr. Y has contributed capital in the form of cash. So here let me write cash account debit, and what is the amount involved? It is 50,000. Then I have stock introduced by Mr. Y. Debit what comes in, stock comes in. So stock account debit, and it is 70,000, and I should give the credit to Mr. Y capital account. Mr. Y capital account, and that should be some of these two items, and it is 1,20,000. So now we have captured all this, but this does not look that great, because if you notice, in a single transaction I have two debits, then one credit, then again two debits and one credit. So what I'll do, I'll try to group all the debits on one side and all the credits on other side. Okay, and in this process, if you notice, I have two cash account. I have one cash account here, I have another cash account. So when it is same nature, why I needed two cash accounts? So what I'll do, I'll club both the cash accounts. So I have a cash balance of 90, and here I have a cash balance of 50. So what I'll do, with this 90,000, okay, let me add the cash contributed by Mr. Y, that is 50,000, in a single entry. Fine. So now I can remove this entry. This entry is not warranted now because this single account captures cash received from both the parties. Fine. Then I have two debits now, or one, two, three debits. I have one, two, three debits, and I have two credits. Let me organize them. Debits on one side, credits on other side. Okay, so let me just bring this here. Fine. And let me take the stock over here. I've taken the stock over here. Now Mr. X capital account is showing some figure which is fundamentally wrong, because it takes into consideration the cash balance, but that cash balance includes cash contributed by both. So this will become wrong, and Mr. Y capital account already it is showing the computation is wrong. So what we have to understand now is, by clubbing the cash balance, we have totaled the cash brought in by both the people, but furniture stands independent, stocks stand independent. So now it becomes our responsibility to find out what is the exact capital brought in by Mr. X. So now we should go back to the question. Go back to the question. What is the capital brought in by Mr. X? Mr. X has brought in capital in the form of cash and furniture. So cash of 90,000 and furniture of 20,000. So this is the capital brought in by Mr. X. And we'll go back to the question, we'll identify what is the capital brought in by Mr. Y. Mr. Y brought in a cash of 50,000 and stock of 70,000. So let me total them. And now let me total the debit side and credit side, and let me check whether what I have done is right. Because in compound entry the rule is the total of debit and credit should tally, and here please watch, the total of debit and credit is 2,30,000. So this gives me a satisfaction that yes, I have done this compound entry rightly. So it's time that I have to give the narration. I have to say what happened in this transaction. I have to say, let's put it here. Yeah, let's put it here, being capital introduced by Mr. X and Mr. Y. Okay, so this is the narration I wanted to give. So understand, compound entries, or those entries which you can pass when you notice the transactions are uniform. Okay, they should be a similar transaction and they should be happening on the same date. That's more important. And the caveat is you have to ensure the total of debit is equal to credit.
Thanks for watching this video, and I hope you like this lecture. If you wish to learn more on the areas related to this topic, check our comprehensive course. I have shared the details and link in the description below. Click, sign up and enroll. I'll see you inside the course.